Companies that hold silver assets outside Mexico are sitting in an incredibly strong position right now. The smartest capital is already shifting toward miners, operating in politically stable regions such as Nevada, Canada, and Australia. In today's world, where governments are taking aggressive stances on resources, jurisdiction is no longer just a detail, and it is everything. Safety, legal protection, and political stability are now worth a premium. If Mexico moves forward with nationalization, these non-Mexican miners will not simply rise along with silver prices. They will be revalued at a significant premium. The market always rewards security, predictability, and certainty. Risky regions push investors towards safer havens. Money doesn't disappear. It relocates to where the system protects it. But this doesn't mean Mexican mining companies are doomed. Some of them may find a way to survive. Those able to negotiate favorable contracts or agreements with the government could continue production, perhaps even under more advantageous terms if they become the few approved operators. Ultimately, whether in Mexico or outside, silver itself becomes more valuable. Supply disruptions affect everyone, and scarcity always drives prices higher. This is not just a story about one country. It's a global story about supply and demand, and how the market reacts to scarcity. Silver is entering a period of structural shortage. Industrial demand continues to rise, investment demand tightens, and supply cannot flex quickly to meet spikes in consumption. Mines cannot simply double output overnight. When supply is constrained, any disruption compounds quickly. That's why the scarcity premium is about to rise sharply. What many call the flash crash in silver prices was not a failure of the market or the silver thesis. It was a temporary dislocation, a moment when price disconnected from reality. For a short time, silver traded at prices that made no sense in a world where supply is limited and demand is growing. In fact, that flash crash should be seen as a gift. It was a rare moment where physical silver became momentarily cheaper than it should have been, a brief time machine, allowing investors to buy metal at levels that would normally be impossible. These opportunities are rare and fleeting, appearing only during confusion, mispricing, or panic in the paper markets. That brief calm was the eye of the storm, because the storm itself is real, and it is already forming. The storm is Mexican nationalization. The storm is a growing global sellers' strike. The storm is miners choosing to hold back supply rather than sell into a market they know is mispriced. When miners withhold production and governments step in, price discovery breaks. And when that happens, the reset is not gradual. It is sudden, sharp, and inevitable. When this storm lands, silver will not be trying to recover $72. That level will become irrelevant. Prices do not move backward after a supply shock. They surge forward. Triple-digit silver will no longer be considered extreme. It will simply be the new baseline. Supply lines are already stretched thin. New mining projects take years and billions of dollars to develop. Labor disputes are increasing. Banks remain heavily exposed through paper contracts that rely on continued supply. And when delivery matters more than promises, leverage becomes dangerous. Physical supply is tightening at the exact moment demand remains robust. This is not speculation. This is arithmetic. When supply contracts and demand stays constant, the market has no choice but to reprice. The move toward $100 per ounce is not a forecast. It is not speculation. It is mathematical certainty. The only remaining question is timing and positioning. For those who see the storm coming, there is no more important question than this. How much exposure are you willing to take before the reset occurs? The window for opportunity is short. Those who act now will secure positions at levels that future investors will look back on with envy. Those who hesitate risk missing out entirely. Silver is no longer just a metal. It is a story of scarcity, strategy, and survival. It is the story of those who understand that true value is not determined by headlines, but by control over tangible, finite assets. And as this storm approaches, the lesson is simple. Prepare, position, and protect yourself before the market forces a repricing that will leave latecomers behind.